looking in the mirror the other day, and there was hairs growing just below my hairline.
Right.
So I thought, I'm actually starting to grow new hairs,
Right.
bigger, thicker hairline.
Right.
So I've decided that I must be in that ninja mode now. You know our family's all ninjas, don't you?
Yeah.
Comes from my dad.
Yeah, your dad explained it to me one night.
Did he? Must be true. I've doubted him all these years. I'm regenerating.
Wow.
And it wasn't a grey hair.
The silverback gorilla makes a return. Welcome to Inside Property and Finance Podcast. Today, you've got me, Steve Hand, and Paul Rawson, my business partner. Paul McFadden, where are you?
Still away.
Still away. So today we're going to talk about what sort of property should you go for when you're first getting into buy-to-lets, or as a landlord, or property developer. But no, let's keep it landlords. First-time landlords. How do you know what property type to go and buy?
I don't know. Is that not a bit like picking a girlfriend?
Could be.
Yeah.
Brown one first, blonde next.
Careful where you stop.
Yeah.
Obviously blondes. We both agree on that.
Yeah.
Right. Okay. Oh, that could have ended in a disaster, couldn't it?
Yes.
I hate to start with, well, I suppose it depends, but it does depend, doesn't it? If there's a great deal to be had on an apartment, it's a great deal anyway, isn't it?
Yeah.
But I suppose if we generalise it, over the years, this is just my personal opinion, I'm sure plenty of people will disagree, but of all the stock I've got my hands on over the years, if someone said to me, what would be your preference for a typical buy-to-let? It would be housing, not apartments. And it would be probably 3-bed semi.
Yeah.
For me.
3-bed semi over 3-bed terraced? Or you're not too fussed?
Not too fussed, but something a little bit above the bottom.
Yeah.
And my thoughts on that are apartments can bring many problems with them. I know they can be good yields and things like that, but you can tend in often with management companies, other owners not keeping up with their payments, or the development gets a bit shoddy, or the management companies are run by idiots. More modern apartments are not always the great for neighbour relations, so you can get problems not with your tenants, but by virtue of the ones next door through a paper-thin wall and things like that. I guess this is a bit cathartic, this, in the way I'm spewing out all the crap about it. Don't get me wrong, I've got some apartments that have been great, absolutely bob on, not a problem, but others have maybe just brought problems with them that I think are really unique to investing in apartments.
Yeah.
They often don't increase in value as much, or the value demand, things like that.
Yeah.
I'm not saying people shouldn't buy apartments, because there are some great ones, especially in higher end developments.
Yeah.
And things like that, but I think they just bring a few more problems to them that you don't tend to get with the housing stock, and I just feel as though personally it's been less stressful, more profitable for 2 ups, 2 downs, 3-bed semis.
Yeah.
And if someone gave me a choice between those two, I'd probably go 3-bed semi.
3-bed, yeah.
Why not 4-bed detached, 5-bed detached? Well, then we're going outside of great yields, aren't we? As a general rule. I know there's exceptions to all that, isn't there? Of course.
Yeah.
But that's my general feeling.
Yeah.
Yourself?
If it's rented out to a family member, get that with the 4 or 5 bed or the larger family home. Generally speaking, there is a correlation, isn't it, that the yields go down.
Yeah.
I think I'd agree with that. I'm thinking about the portfolio that have grown, and it is weighted in favour of apartments, and I think that's just by virtue of the fact I've moved around, being younger, and I've tended to buy property, as you know, where I've lived.
Not let to buy.
And let to buy was part of my strategy, as you know. But Liverpool, Birmingham, then Wigan, Ashton, round work and stuff. And there's been, it's a game of two halves. There's that one, because the very first place I bought, it did fantastically well on the growth. So on the capital appreciation side, I mean, not really my doing, let's be honest. Liverpool got capital of culture, and between the period when I bought it and sold it, 2.5, 3 years, it pretty much doubled in value. That's not normal, I know that. But it's easy to look at apartments and think, you're right, you've got service charge, you've got the management agent to deal with. There are some headaches that you don't have with houses. on the plus side, you tend to get less maintenance issues. You know, you're not responsible for like the roof, the windows, all that other stuff. It's kind of wrapped up within the service charge. So as a yield, and I've had this conversation with Laura J, my wife, that would we buy an apartment again? And the answer to that is I would, but my criteria is different than houses. Like the yield has to be a little bit higher to accommodate that service charge.
Yeah.
And ideally, I would buy a freehold block. So I'd buy a block that maybe can be cut up into 8, 10 apartments, and then I'm the freeholder as well. So I wouldn't rule them out. And it does still come back to that old adage of location, location, location.
I was just thinking before you said it, there's a lot of people perhaps listening who are based, especially in the centre of London, going, what are you guys on about?
Yeah.
You know, I've been in apartments all my life in the centre of London. I've made fortunes on capital growth, and we do get that. Yeah?
Of course.
And you know, this is a bit of a generalisation conversation. I think we need to keep reiterating before. I've had a great result. You know, I bought my council flat in Peckham in 1968, and I'm a millionaire at the back of it. We get that.
Yeah,
there's a generalisation.
But yeah, I can think. I'll give you 3 really good examples of properties I've bought that are all apartments north of Birmingham. Well, one was in Birmingham, and they all did really well on the capital growth. And Liverpool, Birmingham, and where we used to live, of course, in Altrincham. So three different areas there. But I've also had ones that didn't do so well, like, you know, say the Ashton ones that we've got in terms of capital growth. And there's another one I've got in Liverpool that's just not seen the growth that I expected it to see.
Yeah.
But in terms of renting it out, so let's look at month to month, year to year, they're generally always rented out. You know, I don't have problems with voids. Even when the market was going through a boom period, very rarely get any voids. As long as it's priced right, and I always keep it in good nick, you know.
So let's just pick one of them out that you just mentioned, the Liverpool one. But you've had another one in Liverpool that you mentioned earlier that's done well.
Yeah.
Not a million miles apart geography-wise.
No.
I know the ones that you're on about.
Yeah.
But, you know, I don't want to upset people by specific location. But I know there's only a 5-minute walk between the two of them, really, if that. Why do you think one's done so much better than the other?
Well, the very first one I bought was, you'll know the area, but right on the waterfront there. And I think that was just fortunate that there was an undersupply at the time. So it is the old economic supply and demand thing that came into it. But it's on the waterfront, you know, it's got an attractive location. It was a 2-bed apartment as well, which is arguably, there's more demand for that than 1 bed, or there certainly was back then. And the other one that I've got that's a 2-bed, not the 1-bedder one in Liverpool, the 2-bed one, not quite as well. But why? It's right on a main road. So that will put some people off. Yeah. Yes, it's got parking, city centre locations, that's a tick. But it's not as visually appealing, I don't think. It's a little bit boxy, not as spacious inside. And I just think there's better apartments around it, so people choose those other ones.
Yeah.
So just not seeing the growth. It's done all right, but it's just not as good as that other one.
Yeah, but the things you've mentioned, to be fair, if it was a house there and a house there, probably the same problems would have occurred on the one that's not gone up in value because of what you've mentioned. Yeah. To be fair to this conversation, it's not that it's pertinent to apartments in general, and you just happen to have a good apartment, the one that has done well. It's just maybe that location.
Yeah. So I'm looking at it in those examples more from a capital growth point of view, but looking at it, let's imagine that you're holding this for the long term. So year in, year out, is it as profitable? Again, I come back to that point that when you're looking at your criteria for buying properties, and we should all have criteria, like in the early days, I didn't have criteria. So now I'd have very strict criteria for growing the portfolio. The apartment, I have to accommodate that service charge. And I know you've got maintenance issues with houses, so that needs to be thrown into the mix, but I would set my gross yield out accordingly. So as long as I've got a certain amount of cash flow each month from those, with interest rates being relatively stable, then it wouldn't be a no-no. It's just a very sort of paper transaction calculation in my head.
I think to be fair to us both at that time, of the apartments that we did buy, and maybe they've not done quite as well. We bought in an environment where there was almost this every 8 years everything doubled.
Yeah.
And it'd been quite so that, you know, and I know landscapes changed a lot since then, and that's life, you know, and you can't beat yourself up too much about it, but there wasn't any underlying data that you could go off about what, and you know, go back to what about the pandemic and apartments after the pandemic.
Oh yeah,
People are starting to forget again now, aren't they? Have you
Yeah,
noticed?
yeah.
But just after that, you know, whoa, why do we all want to live in shoeboxes?
Unless it's got a garden, no chance.
Yeah, so suburbia became the dream all of a sudden, didn't it? And, you know, out into the suburbs. But I think that what you said then is your criteria is very different. And I think you're spot on. You know, that's the secret to property investment, isn't it? It's you got to roll with the punches and think, right, this isn't 2005 anymore. This is 2023. This is how 2024. This is how the market is rolling now, and change your criteria accordingly.
Yeah.
And I guess the other thing is this: your own knowledge increases. So there's no way on God's earth. I know we're on about flats or versus houses here a little bit, but there's no way I would invest in property the same way I did then, even if the market was still exactly the same. Every year it's doubling and things like that, because of the knowledge that you acquire.
The knowledge and the opportunity, and generally over time you get greater opportunity coming towards you. So that gives you the luxury of choice. And so the opportunity cost of purchasing that apartment might be buying a big old house and renting it out as holiday lets or serviced accommodation. That wasn't on our radar back then, was it?
No.
You just wanted something very low maintenance.
I don't think it was on anyone's, to be fair. It wasn't really a thing, was it?
No, it wasn't. It's probably more post-pandemic, isn't it? The serviced accommodation strategy. But yeah, I would, in summary to the apartment versus houses argument, definitely wouldn't rule it out. And of course, London's a very different market on its own. So, you know, you're very fortunate if you can buy a house in London, aren't you? In central London, zone 1 and 2. So most people do live in apartments, and apartments have proven over time to do very well. I mean, I remember looking at some stats from 1995 to, I think it was around 21, and the average was at 3 times growth for the UK. In London, it was 5 times the price that you would pay back in 1995. That was the growth that they'd seen. So, yeah, it's very different. And of course, it'll be different moving forward as well, because you've not got all the international money that we've had previously.
Right. So just moving it on a little bit, yeah. So we're in 2024 now, yeah. What we did 20 years ago was your typical get some dough together, go and buy a buy-to-let, get some dough together, go and buy a buy-to-let, try and get the price down as much as you can, which in a booming market was difficult, but it takes some money out of the equity of what you've got, go and buy some more buy-to-lets, and it's quite a slow burn, but, you know, you're building a portfolio. It's not all bad, you know, you're making rental profits, it's going up in value over time.
Yeah.
Roll on 20 years, if I said to you, right, you can go back to Steve Hand in 2004 and you can tell him what you know now, what would you say to him in terms of go use this strategy? And your answer could be use quite a few, but are you going telling him to start doing flips, buy remortgage, rent it out, assisted sales, yeah. And by the way, if people out there don't really know what all this is about, you really need, and you're looking to get into property, my message to you is first and foremost, get educated, because what I'm about to demonstrate here is that guys who were mortgage brokers at that time invested well, but we could have done it a whole heap better, yeah? So back to the Steve Hand in a time machine, goes back to see Steve Hand 2004, is he assisted selling, is he flipping, is he developing, is he what you're going to tell him to do with what he had available to him at the time, financial wise. So this is for the new property investor out there. I guess in summary, where do you think you start when you're just starting out? What's the place to go to? And
I think,
and we can ask this because Paul's not here.
Oh yeah. So age comes into this a little bit.
Go on.
So I'm trying to be as measured as I can and as neutral as I can. I think you can afford to be more aggressive when you're younger with your strategy. You absolutely can, in business generally.
Time to recover.
Time to recover, yeah. So I would be more aggressive in my 20s than I am now, but I've got the benefit of knowledge now, haven't I? So, but your point was go back to 2004. So what's that? I'm 29 years of age, but I've got the knowledge that I've got now. I would, the word leverage is going through my mind. That's what I can see. So I would leverage other people's money, definitely. That wasn't even a thing in my head back then. I would utilise creative strategies. So bridging finance, hadn't even heard of it back then. I would utilise bridging finance, and I would buy property not as single units. I would buy them as a job lot. So I'd probably set my criteria as I'm not buying property unless it's massively undervalued, unless there's 10 as a minimum coming at once, because I want to get to 100 plus properties or 500 properties or whatever that may be. For me to get to even 100 properties at that age, if I'm picking them out singularly like that, that's a headache. That's a lot of admin. That's a lot of time. I want to be buying them in, fewer transactions, job lot, and I would add value and I would refinance and hold and do that.
That might take a lot of capital, though, for that kind of a transaction. If it was more, you've got the equivalent of, I don't know, the 25% deposit on a typical property of in that time or this time for that matter. What we know is it's you suffocate yourself by just pumping it into a buy to let, and then it's like, what's it worth this year? Oh, can't quite get enough money out of it. It's another year, another two. Then the crash happens or whatever, and before you know it, you know further on in 10 years. So coming a bit back to what you're picking up on there, it's acceleration. But if you're more of a typical starter, and maybe you've not got the means to go and get those mini portfolios or bigger portfolios, or you're not clever enough to know me and you, who you can sort of a below market value transaction, so you don't need a lot of dough. But or even just some people's very nature might be, I just want to do a little bit at first and then grow on, which is nothing wrong with that.
No.
Yeah. Are you going into flips, or are you going to try and?
I would blend it. Two things. I would blend flips. So for those that don't know, flips, of course, is you buy a property, you renovate it, you add some kind of value, don't you? You sell it on, you take your profit. I would do that because that's a great way of getting cash flow with some holds. But the holds that I would set a minimum criteria of, let's just say it's 9% or 10% gross yield. And I would hold properties that lend themselves well to strong cash flow. And that could be serviced accommodation, it could be HMOs, but I would really sweat that asset, wring the towel out, and maximise my income from holding those assets.
Yeah.
But in the meantime, pick up those flips. And with my knowledge now, I do genuinely believe you don't need much money. Sometimes money is a hindrance, and I'll explain myself. When you've got a big pot of cash there or you've got equity, we do get complacent. And when you've got no money, you absolutely have to make it work. It will force you to get off your arse, get investors believing in you, and utilise their money, give them a return, put it into property. And when I think of the most successful people that I know of this recent time, they've generally done that. They've not had much money of their own to get going. And it puts them into another gear, a gear that they didn't know they had. So, and that's what I encourage people to do. Even if you've got a pot of money there, leverage other people's money, leverage bank money, leverage systems, and that will accelerate your growth massively.
Yeah. I wonder whether it's a bit of they've got to, if they've not got a lot of money. But when you've not got a lot of money to lose, you've not got a lot to fear either, have you?
It's true.
So the fear doesn't hold people back, perhaps. Getting a bit philosophical here, really, aren't we?
Yeah, we are getting old.
We are getting old. As long as we keep getting old, that's all right. Yeah, it's when you stop getting old that's when you've got the issue.
Yeah.
Oh, did I tell you I'm regenerating?
No.
Oh, good news. Yeah.
You're not going bald.
No, exactly. So regenerating, not getting old, not becoming a geriatric. So looking in the mirror the other day, nothing to do with property, this, by the way. Looking in the mirror the other day, and there was hairs growing just below my hairline.
Right.
So I thought I'm actually starting to grow new hairs, bigger, thicker hairline.
Right.
So I've decided that I must be in that ninja mode now. You know our family's all ninjas, don't you?
Yeah.
Comes from my dad.
Yeah, your dad explained it to me one night.
Did he? Did you enjoy that explanation?
Yeah, it's very good.
He's a bit weird, isn't he? Yeah. Anyway, so it must be true. I've doubted him all these years. I'm regenerating.
Wow.
Amazing. And it wasn't a grey hair.
The silverback gorilla makes a return. That's Joe's words.
Well, I'll see Joe when I get back to the office. Little curly bob.
But
So
fascinating on. Yeah.
Anyway, digress. Back to property then. So we would leverage.
Mm-hmm.
Surely, and I can't just stress. We're not just saying this because we do business with Paul. Get educated.
Oh, that goes without saying. I'm assuming that people, wrongly assuming that people know that. Absolutely, get educated.
And that doesn't mean sitting on the internet reading shite. No.
Yes, there's books. I mean, we've all read the books. I did a post about this recently. Read the posts.
Starting point.
Yeah. Been on the courses, etc. But there is a correlation with this that the best investment people will ever make is in themselves. Like, absolutely. And there's a multiple of that money spent. So if people will have find the courage to spend money on themselves, however which way they do it, they will see a return. But the caveat is they've got to do the work.
Yeah.
They can't expect to sit there and meditate all day and bring it to them. And I'm a meditator, but you've got to do the work as well.
So we get the odd call, don't we? Yeah. So again, we're going a bit more into personality traits here. People who decide they're going to get into property, and the call comes in at work, doesn't it? Yeah. And forgive me if I've brought this up before, but I always find it amusing. I find the frustration on our team's faces amusing, I must admit. And it's the right. Okay, what's your inquiry about? Oh, I want to get into property investment. Okay. What is it that you're looking to buy at the minute? Oh no, I haven't got anything. I just want to get an idea. Oh, fair enough. Yeah. Well, right. What's your income situation? Oh, I don't work. Yeah. All right. So have you got some cash, or have you got investors to get going with? No, I've got none of that either. Okay. So you've not got a project. You've got no income. You've got no cash. Got no investors. Have you got some assets in the background that we can maybe leverage against? No, I've not got any of that either. Okay. Right. Okay. Well, this is how things work. We either need this, and I'm because I don't want to do a 10-minute of what our advisors will be giving them a synopsis of, if not 20 minutes. And then at the end of the call, it's don't you guys do all that for me? Yeah. And we have had that comment, and it's crazy, isn't it? It's like,
find me the investors, find me the deals, find me everything else.
What else do you want us to do? Go on like wallpaper and paint and brush up and put it up for sale, get a over asking price, and send you half the profit at the end of it.
Yeah, of course.
That's how it works, isn't it?
Of course it is. No, get the education. You'll find the deals. Like the two areas, the two things that was taught to me, you spend 95% of your time on, you should do, or work towards this, is finding the deals and finding the money. And if you find a good deal, ideally that's below market value, or you can add value to and it'll kick on the value significantly, then that is a big part of the puzzle.
Yeah.
And then the money, you might not have any money to one side, but if you've got a really good deal, the investment will come. You'll find the investment, and then we can leverage that with bank finance, can't we? And make it happen.
Yeah. Okay. So, good place to start. Jumpstart events.
Jumpstart events, yeah, definitely. A week's intensive. When I did Protégé, it was. I think it was 4 days. It's 5 days now. It's of massive value. It's not a big commitment. Like, when you look at what you can achieve from investing that small amount in yourself and giving up a bit of time and thinking outside the box, and it will get people thinking outside the box, their property journey will go on massively.
Then they can come to us guys.
Yeah.
We'll piece the finance together.
Yeah.
Just put the hard yards in. That's the bit that we're saying we don't do for you.
Yeah, nothing,
which is fair enough.
But nothing comes easy, but you wouldn't want that, because every man and his dog would be going after it. So you actually want it to be hard, paradoxically. And then, that top 1% will rise to the top. And it probably is only a few percent of real success stories, but isn't that life anyway? So,
Absolutely, yeah. And the final misconception about starting off in property, you need tons of cash to start.
yeah, that's bollocks.
No.
And that's just a fallacy. And really, it's a blocker for most people. And it alleviates them in their heads of responsibility. But no, if you want anything enough, you know, within reason, you want anything enough, you'll get it.
Yeah. Okay. So I guess the easiest thing is for the guys out there, if you're thinking about getting into property and maybe that's just stirred a little bit of interest, you know, should it be houses, should it be apartments, should I flip them, should I retain them, where do I start? Well, you've had some snippets there of where we think you should start. And if you want a little bit more on that, reach out, either put some comments down below, come to the team and talk to them. And if you need some education, we can also get in touch with the right people and you can start your journey in a very planned fashion. And I'm sure with a little bit of effort, or a lot of effort maybe, you'll succeed in property. True?
Very true. Yeah. Bye for now.
Bye-bye.